The Crypto Adoption Index was just released by Chainalysis. Mt. Gox isn't giving out its owners Bitcoin just yet, and $500 million raised for another crypto fund. We discuss all this right now with Matt and Nick over at Collective Shift's weekly recap, actionable insights, and a breakdown into the crypto market, all in under 30 minutes. As always, we'll start with a market update, followed by the Chainalysis new report. So Matt, what does the market look like?
Thank you, Leon. Down slightly this week. Bitcoin is about just above 26,000 US, and ETH is slightly under 1,600 US. Notably, it was an even deeper sort of red week in the traditional markets, particularly the US stock market, which had its worst week in 6 months. So we've been talking a lot, particularly earlier this year, about the correlation between US stocks and crypto prices, how that was very strong in the bull market, and how it has weakened, considerably, over the past 12 to 18 months. And I suppose last week's price action, again, was another reminder of that sort of, weakening correlation where, go back 2 years or so, if you told me US stock indexes were down, by 5 to 6%, I would have definitely said that BTC and ETH would fall by 8 to 10% or so. So that weakened correlation continues. A bit of nervousness in the market about what's going to happen with the US government in terms of a possible shutdown. That seems to be what's driving the news there. And we saw the Federal Reserve keep interest rates on hold, which was no real surprise there. So yeah, another grind lower for prices, Leon, but not as bad as stocks, at least this week.
Yeah, that's right. I think usually crypto fares a lot worse than stocks, but I think this week we're a little bit safer, so we can smile a little bit. But at the same time, you got to be cautious. This is crypto; it's a high risk asset class. So yeah, we'll keep you guys updated. Thanks a lot for that, Matt. Let's go ahead over to Nick. Now, Nick, there is some big news out. There has been a new report that actually got released. It's actually pretty interesting for anyone out there who's interested about crypto adoption. So, Nick, I'll let you take it away. What is this new report? Who made it, and what does it tell us?
Yeah, this report is from Chainalysis, which is a leading cryptocurrency intelligence firm, which kind of just scans the blockchain and gives analytics and data for those looking to stay on top of what's happening. So they release sort of yearly reports looking at exactly who uses blockchains and different cryptocurrency protocols and different dApps. And in their latest 2023 report, they found that yes, a lot of the crypto market has seen lower adoption, but it still remains strong in some of these lower to middle income earning countries. So India, Nigeria, and Vietnam were the top 3 countries for adoption. And then these other lower to middle income nations sort of led the way. So we saw, although adoption was falling globally, we still saw in a lot of developing nations that adoption actually kind of stayed the same or plateaued, which is always a good signal to see.
Thanks a lot there, Nick. Now, for anyone out there that might be interested in crypto adoption, this is how we're going to get the next billion people into crypto, right? We have to allow people to be able to go into the space. A space that doesn't have people going into it, it will slowly die out. And that's not what's happening with crypto so far. And I'm sure, as Matt was just saying there, that we do see adoption in multiple different countries happening around the world, primarily in the Asian regions. So that's really interesting. We will leave the link to this report down in the comments description for you. So just have a read of it and see what you think for yourself. Nick, thank you again, as always. Really great insights there. Now, Matt, I want to come over to you again. Let's talk about crypto conferences. There's been a whole bunch that has actually just gone, and some few that will be coming fairly soon. Which specific conferences are you keeping an eye on, and probably why?
Yes, we've seen a lot of conferences, particularly in Asia. So keeping with that Asian theme, in September, there's been a string of conferences. It must be conference season over there. With Korea, had Korea Blockchain Week, start of the month. Over in Singapore was Token 2049, which is the biggest sort of crypto conference annually in the Asian region. And both of those, all reports were, attended, a higher sort of than expected attendance, and, a lot of money being thrown around by different sponsors and whatnot. Certainly something you would not expect from, an industry and an asset class that's, nearly 2 years now into a bear market. So that was encouraging. And then, of course, you've seen other conferences going on in recent weeks, particularly Permissionless over in the US, as well as Mainnet. I know there was DAPCon, another annual big conference over in Berlin. So there's just to name a few. And then, of course, we've got some to wrap out the year as well. So, Solana, off the top of my head, has their biggest one by the end of the year. So it's really, you wouldn't really think it's an extremely quiet market when you look at this conference calendar. I'm not sure how much time the developers have to build with this rate of events, but it's still, to me personally, like I get confidence or encouragement out of seeing such a high turnover of events that are, again, not just desolate and no one's rocking up. They're actually getting a pretty good attendance and interest from within the crypto community, but still some venture capital interests and whatnot, which we might talk about soon.
Yeah, that's right. I think conferences are actually super important to kind of having a baseline of what, for example, what that chain is feeling like at the moment, or what the ecosystem what's happening with the ecosystem for Ethereum or Solana or whatnot. And also, yes, you made a good point. They're going to so many conferences. Will they have time to keep building their products on these chains? But at the end of the day, it's still a net positive for the entire space. More collaboration, more people getting to know each other and just working together just helps make crypto a little bit better. So, I think we will be at one of these conferences very soon. Next week, stay tuned. We'll let you know which one. Now, let's go on to Nick, my friend. Now, Mt. Gox have been in the news really recently. Now, Mt. Gox has been this overdrawn, long, protracted issue where it was one of the earliest crypto exchanges. It did, unfortunately, go out of business. And so they have some people's Bitcoin still. What's the latest news with Mt. Gox, Matt? What are they doing now? What are they saying?
Yeah, so if you've been into the industry a while now, you would have heard Mt. Gox. As you said, they were one of the biggest in the space. They held pretty much the bulk of cryptocurrency volume and exchanges. So after the hack, it's been continually pushed later and later and later. We finally received news that they would likely get these Bitcoins finally sent to the creditors, who were basically going to get 90% back. So almost all of their Bitcoins that they've lost is finally got to come. I think more after about 8+ years. So this is about 140,000 Bitcoins, which equates to about 0.6% of the total supply. So a lot of people were fearful about large-scale sell-offs if this is happening. But a news article came out this week saying that the deadline has been pushed back. So I saw this being misreported in a way. It's not to say that the deadline is all the way delayed. It just means that you are allowed more time to put in your applications to get your Bitcoins back. So I think we still see a significant amount of sell-off relative, especially as these were received at a very early point in Bitcoin's price when it was very low, even considering where the price is now. So it's just saying that it's being delayed by a year, but it's not to say that the Bitcoins won't be sold yet. So it just, I think, means that there's going to be extra time for people to sell their Bitcoin.
Yeah, that's right. It's just an extension of the deadline for them to file a claim, if I believe so. Yeah, it's not that it's all just going to hit the market at a later date. And that's not to say it will hit the market. A lot of different market participants, everyone owns different amounts. They may want to realize those capital gains, may not realize it, take a loan against it. Lots of things may happen. So my question then, Nick, is that do you think as an industry, we've actually been focusing on this whole Mt. Gox thing a little bit too much? I mean, Michael Saylor and probably MicroStrategy own nearly as much Bitcoin as the entirety of Mt. Gox. What do you think about that? We're giving it too much attention?
Probably. It's just a matter of once it's finally is done and dusted, then I'm sure there's going to be another event, which maybe it's the US government selling their Bitcoin as well. So there's a few different market participants who have sizable amounts of Bitcoin that could be sold. So I think it is definitely a case of sort of being overblown, and it's probably just one of those stories that's been dragged out so long that finally we're going to see a resolution.
Yeah, that's right. Similar to another story like China banning Bitcoin for like the 9th time. It just keeps coming every year. Mt. Gox, China bans Bitcoin. We've got to expect it in the industry. So, Nick, thank you very much for that, man. Let's go over to Matt. Now, Matt, I hold this really close and dear to my heart, which is blockchain security. Now, everyone out there listening, you have to make sure you are secure on chain, either when you're using an application or when you're keeping your own keys. Because remember, in crypto, not your keys, not your coins. But Matt, there has been another major hack in the crypto industry. Can you enlighten us a little bit which crypto network was actually suffered from a hack?
Yeah, this one came in, not long before recording, and it's related to Mixin Network. For anyone listening, that's Mixin Network. They've been around a long time now. I've never really used them myself, but they call themselves a decentralized wallet service. And yeah, today they temporarily suspended deposit and withdrawal services, because they were attacked by hackers for an amount that involves 200 million in funds. So they're saying that it was the database of their cloud service provider, so something like AWS, was hacked by these third parties, and that resulted in the loss of some of the assets. So it's not really known right now how much of, I think, this 200 million is actually being stolen just yet, but it's looking like it'll be a considerable chunk of that 200 million. If it was all that 200 million, for example, it would bring it up to be top five, maybe just outside the top five of like all time, I suppose, hacking incidents in sort of the crypto industry sort of existence. So that sort of gives you an idea of how severe this is, even at a time where we're in deep into a bear market, and the value of a lot of things has really decreased. So yeah, not a good sign there, unfortunately. And again, it continues that bad look of crypto from particularly regulators and policymakers. If indeed this does come out that the hackers were associated with North Korea, which many have been this year, that again would just really be a bit of a more damage to, I suppose, the perception of crypto being this way to circumvent sort of sanctions on the countries like North Korea, which really hurts crypto from a sort of advocacy standpoint. So yeah, unfortunate to see today, and of course, as you said, Leon, so important to be across all your security and know the risks when you're dealing with certain smart contracts or just certain apps or protocols in the space.
Yeah, thanks, Matt. And that just brings to mind just security in the space. As you were saying, we don't want this bad rep, this bad reputation that crypto on chain isn't very secure at all. And of course, you got to realize that a lot of these blockchains, cryptocurrencies, they're all fairly new in infancy, right? They're just coming out. They're still experimenting within the space. So you have to be very careful when you do go ahead and use something and decide to put your hard-earned money or your funds, your capital in one project or another. If anything, come to the cryptocurrency security center we have over at Collective Shift, and we do explain some of these basic concepts for our members out there. So, Matt, thank you very much for keeping us up to date on that. Now, I want to move on to Nick. I know there has been some slight little news topics around ecosystems going across. Now, Nick, I want to come over to you, my friend. I know there has been a little bit of news about different cryptocurrencies moving to different chains. Just give us a little brief on this. What's actually happening in there? I know there were some cryptos that moved to Solana, for example, or people moving to become an Ethereum layer 2. But what are you seeing from your space, mate?
Yeah, so as you mentioned, that this week was pretty notable because we saw two major announcements of cryptocurrency blockchains that have transitioned or aim to transition towards the Ethereum ecosystem once again. And these two are Canto, which is a new blockchain, which I think got a lot of attention early on in the year. And another one was Asta, which has been deployed across different ecosystems, most notably Polkadot. And they both announced their plan to move towards the Polygon and Ethereum ecosystems. And this sort of builds on that wider trend of potentially chains moving back to Ethereum, which, as you said, the previous years we saw chains moving away because of high gas fees, inability to onboard users effectively, and to really build their products on those blockchains. But yeah, it really marks maybe a signal of these coming back. Another one is Salo, which is at the moment proposing to move back to Ethereum, which is another layer 1 blockchain. And this was something that I did do a deep dive for our members most recently about.
Yeah, that's right. And for all of our members, if you're listening out there, make sure you do check out that article. I will link it in the key takeaways in this video. But Nick, I've got a question for you there. So I know layer 2s were getting a lot of popularity before because people were moving away from the base chain, as you said, too expensive to actually transact, at least for a regular person. So what does that actually mean for other layer 1s? If different blockchains start going as an Ethereum layer 2, is there much room for layer 1s to exist? Everything will just start existing on Ethereum, right? They'll use it as a settlement layer.
Yeah, this is probably a really important point that I'm really interested at paying attention to in the coming, 12, 18 months, especially if there, if there is a next bull run in the market. Because I was listening to different podcasts around. I know that there was the one with one of their MasterCard uh, cryptocurrency specialists, and they basically said that they're expecting about sort of the same power laws that exist in social media or other technologies where a lot of the value is captured or used in a one, two, three, four, five of these major platforms, and then there's a long tail of other platforms that are really vying for a smaller piece of the pie. The idea is perhaps blockchains might operate on a similar level, and that we see a few big chains capture a lot of the market share, whether that's Ethereum, whether it's Solana, whether Aptos can carve out a niche, but then there may be a long tail of other blockchains which service some other smaller bits of the market, which is something that I think is pretty realistic. And I'm really interested to see exactly how these other layer ones can battle and compete against these other Ethereum like networks. Because if you look at CoinGecko and you look at the top 100 coins, I reckon half of them, about 40 to 50, are sidechains, blockchains, Ethereum L2s, or a mix and mash of both. So we're seeing a lot of these blockchains, and it's just going to be a matter of how they can compete with each other. And we're really expecting a lot more competition in the market, and really excited to see how this unfolds.
Yeah, I kind of get that argument there that you were saying. It kind of brings to mind my argument how there's always a duopoly in economies. For example, you have certain items that dominate the market. You have Apple and Android, right? They are the two major phones. And then you have a long tail of small other ones vying for the small piece of pie, as you were saying. So I can see that totally working out. I guess we have to wait and see, won't we, until something crazy does happen.
Yeah, and we can
Um,
we can also see that there's sort of one argument to say that these Ethereum L2s service one need and help sort of extend Ethereum's network effects and market position. But then there's the counter, which says that perhaps there's going to be one, two, three, who knows how many of these other layer one blockchains that can carve out that niche because they perhaps do stuff that Ethereum can't do. So a good example here is Helium, which I'm not sure if the readers are aware, but it's this platform that allows you to create these little hotspots all around you. And now they're working at creating sort of a low cost mobile network. And this is now transferred to Solana network, previously built on Ethereum, because for what they said, that Solana offers the only way to do it in a low cost, high transaction environment. Something they just simply couldn't do on Ethereum. So perhaps some of these L1s do win out because they're able to perhaps meet a need that can't happen on Ethereum, for example.
Yeah, that's right. That's a fairly rational argument. Not anything is perfect. It will have pros and cons, and wherever there's a con, another project will be able to pick it up as a pro because they have that capability. Nick, that's very insightful, man. Really, thank you very much for sharing that. I want to move on to Matt. Now, Matt, I know there has been some new blockchain funds in the ecosystem. So venture capital funding is what we do look at over at Collective Shift, just to keep an ear to the ground and see who's raising money and where is that money going to go. That's very important to know. So, Matt, who's raised the money and where is it going?
Yeah, finally saw a raise from a new fund that has, yeah, it's been few and far between this year in a very down period for just the crypto venture space. So we saw Blockchain Capital, one of the first sort of funds in the world really for crypto. They announced two new funds, and combined they raised 580 million US dollars. So yeah, a huge amount there, particularly at this time, as I said, where we've been in a bear market for a while. We don't know, how long this fundraising has been going. Maybe some of it was done, when the bear market was sort of getting towards the end. But nonetheless, a really, really encouraging sign to see. And that's actually now, I think, their sixth fund, Blockchain Capital. So they've been a real sort of, foundational piece of what we sort of know as the crypto industry today. And even just last week, I did see some, bigger sort of fundraising announcements from individual startups. Proof of Play was one that comes to mind, where it was 33 million, if I'm not mistaken, $33 million seed round, which even in a bull market would be considered a very high amount for a seed round. So like, why does any of this matter? It really just, brings it back to, if there is a lot of venture capital available to invest in unique and interesting applications of, well, blockchain technology, that would therefore, just enable or help enable, I suppose, a future where more people and businesses are using crypto or using blockchain technology for sort of value adding activities that you simply couldn't do in the traditional world, or maybe you can do in the traditional world, but just not as good compared to crypto. So I guess it just isn't. It's an enabler, really, to really be brief. But noting there, we've talked about Visa and PayPal a lot recently. They were two investors in these blockchain capital, these two funds that were announced. So some big players, I guess, getting involved more in the space in terms of their units or teams that are working in crypto. But then we're also seeing a different form of expansion, this time via the venture arms of Visa and PayPal actually investing capital into these funds such as blockchain capital as well. So very exciting to see, and one that was definitely out of the blue in what has been, as I said, an extremely quiet sort of landscape in the crypto venture capital sort of things.
Yeah, that's right. And if we were right at the top of the bull market, this news would have made highlights and would have people would have gone crazy for $500 million going into crypto. So it just goes to show that it's all about perspective and the timing of the market, right? And like as we discussed last week, Visa, PayPal, they're all here. They're still building in the space, and they have opportunities they're going to be pouncing on. So now's the time to still be in crypto, my friends. Don't forget about it. Thanks, Matt. Let's move ahead into some altcoin updates. I wonder which ones we have today. I think Optimism Foundation recently did actually sell off $157 million worth of tokens in a private sale, no less. So they were, how many buyers? There were 7 buyers of $157 million. And the tokens, though, are subject to a 2-year lockup. What does that mean? It means that they literally can't touch these tokens. They can't sell it on the market. They can probably move it between custodial wallets, but they can't give it to the market and take profits that way. So it should be notable, though, that this week was Optimism. They had issued their 3rd airdrop. So if you are a Collective Shift member, make sure you check the airdrop section in our Collective Shift platform, where we show you the actions to take for you to actually get an Optimism airdrop, and as well as what the last retroactive airdrop was like. So yeah, that's a little bit of update for Optimism there. We'll leave it there, ladies and gentlemen. Let's go on to one of our last sections in the podcast today, things we should be looking forward to. So, Nick, what are you looking forward to next month or even next week? Let us know.
Yeah, the big point next month will be the long-awaited FTX and Sam Bankman-Fried trial, which will be kicking off around October 3. So from all reports, it's going to go ahead October 3. There could very well be a spanner in the works. If that gets delayed for any point, if they need more time, I guess, to create his defense or anything to, along those lines. But from all indicators, it's an October 3 date, and it's just going to be something that I'm really anticipating will. I'm really wondering whether it's going to put another leg down in the market, or how, I guess, the general mainstream media is going to cover this trial, because it's the biggest alleged fraud at this stage that the space has ever seen. And I'm really going to be watching closely to see how mainstream media, really depicts this, because it's one of the, the biggest black eyes for the crypto space. And, with a trial like this, I'm no doubt that it's going to see a lot of airtime through a lot of mainstream media. And I'm also quietly awaiting whether we're going to see anything come out that Sam Bankman-Fried gives evidence against, whether there's any other players in the space who are potentially fraudulent as well to cut himself a better deal. So a lot to, I think, take in, and we're going to be eagerly awaiting this, and we'll be covering this in our newsletter and to Collective Shift members, and hopefully give you an update on the podcast.
That's right. This is a very topical subject. Sam Bankman-Fried and FTX were really well loved and well trusted in the space until they weren't. And this is the thing with crypto, right? It is a high volatile, highly risky asset space. So I really do wonder how the headlines are going to be taking it. Will they put a positive spin, negative spin? We have to wait and see. And of course, that may affect prices. But don't worry, we will be here to keep you on the fundamentals of crypto. We will tell you what we see over in the market. So, Nick, thank you very much for that FTX update. Let's go over to Matt. Let's talk about the SEC enforcements. Now, what's the recent update, Matt? What are you seeing out there?
Yeah, so a report last week from the crypto enforcement sort of lead at the SEC warning that there'll be more legal charges coming for crypto exchanges and even operators of DeFi platforms. This is a trend that we've seen all year really. So I think it would be surprising if it didn't continue, sort of thing. So why does this matter? Well, really, it probably depends what names are involved. If it's a really popular DeFi project, something like Uniswap Labs behind Uniswap, that could maybe spook the market to the downside. Otherwise, I think it's just more of the same. We saw CFTC sort of settle with a bunch of 3 different entities. It didn't really affect price per se, but it was more of a, I guess, reflection of the state of almost a regulatory approach in the US towards crypto, which of course, when you zoom out, definitely has an impact on prices, in my opinion. So yeah, that's something that I suppose is ongoing and might continue to happen even this week, perhaps, in addition to sort of the Coinbase and Binance sort of SEC cases, of course.
Yeah, that's right. I don't ever see a world where the SEC does not go after crypto, because in their eyes, there we are not being compliant. And I don't think things will change anytime soon. We know how slow government moves. So right on, Matt. Thank you very much for that update with the SEC. Now, let's go on to the last section of our podcast, ladies and gentlemen, where we look at things that we appreciated either over or under within the market, things we think you should know, at least. So, Matt, what did you see? What did you appreciate or underappreciate this week? Take it away.
All right, this was one that I think the market sort of overlooked. Didn't see much discussion about it, but Bitcoin actually hit an all-time high in terms of the long-term holders. So, what percentage of all the Bitcoin out there is being held by addresses that haven't really done anything in a long time? This actually hit an all-time high of 76%. So, what we then say is, long-term holders are accounting for 76% of the supply of Bitcoin currently. That is an enormous amount when you step back and think about it. But I suppose from a bearish side of things, that says to me that this has sort of continued to climb like all year to date. This is one that I've been following pretty closely. It's been going through the 70s up to now 76%. All the while, it's been rising in recent months, and that's actually been a period where the price of Bitcoin has fallen. So really what it's saying to me is that there just aren't any new buyers, like, to be frank. And that's not really surprising if you spend enough time in the space. But I suppose it was another reminder that there just isn't really any new holders coming out there who are being interested in Bitcoin and purchasing it. All the while, all the long-term holders are sort of scooping up Bitcoin when they can and maybe adding to their positions. But yeah, a notable sort of data point there for the last week.
Yeah, that's right. That's what we do at Collective Shift. We take multiple different data points and kind of synthesize that for you. So, for example, on the platform now, you can go and check out Checkmate's videos, and he looks at what those whales are doing. Are they actually accumulating that Bitcoin, right? Yeah, it's really great data. Thanks, Matt, for that. Now, Nick, I want to come to you. There has been a really funny video going around the crypto space. I haven't seen it myself. I'll probably go and watch it after this podcast here. But let us know, what is this video about, and why is everyone going so crazy about it?
So as you said, my probably maybe overappreciated Justin Sun, who is one of the biggest names in crypto that has been around for so long, and I think many of us are actually still. If we expected a few big plays to go down, Sun is probably one of the names on everyone's lists, and he's the one that has managed to come out of all the crypto wreckage unscathed so far. But he released a video, kind of, I think it was in aid of his rebranding and of his Tron token, because he's been linked to the Huobi Global Exchange. He's also linked to the and creator of the Tron blockchain. This video just depicts him as basically a superhero who is saving the crypto ecosystem. So it's probably one of the most cringiest videos I've seen, and there's been a really few cringe crypto marketing videos out throughout the years. But this is one that I'm noting down on my checklist for sentiment, and whether there is still another big name to potentially exit the market in a negative way. So not to be too bearish, but it's always cringe when you see these marketing videos, which is always for me a height of whether it's local tops or whatever. But I'm always questioning whether Sun is going to make it to the next bull market and whether he's possibly following the downfall of FTX, because he did rebrand Huobi Global to HTX, which is analogous to FTX, which is hard to draw those parallels. So really eager to see if he can come out unscathed, or whether we're going to see another crypto billionaire, enter the headlines.
My God, this guy is he has a lot of tricks up his sleeve. I can't wait to actually watch this video. You've kind of made me hyped up for it. I got to watch it after this podcast, and hopefully I get those cringy feelings, and maybe I'll get to have your feeling as well that it's a local top. Anyway, I'll go watch that after. Now, I want to share my little underappreciated item actually in the market today, which is Arbitrum Odyssey is actually coming back. Now, for those viewers out there, Arbitrum Odyssey was kind of a campaign by the Layer 2 network Arbitrum. And this is before they had their token launch, where they actually got you on chain to do a whole bunch of transactions, go and use this platform, use this device, use this item, and so that you get to build your on-chain transaction history. Now, that was actually pretty fun to do. They gave you little tasks, a little tick, and a little cross. Very good. Now, it has restarted now. It's actually coming back on September 26th. It's going for 7 weeks. So this, my question, will this really renew kind of the fervor for the Arbitrum ecosystem? We know in the Layer 2s, currently Optimism and Arbitrum are winning the Layer 2 race, but that doesn't mean something else won't come out there. So I think this is a way for them to drum up new excitement, new kind of investments in the space, and a little bit of fun on the side. So that's what I'll be doing for the next week, trying out the Arbitrum Odyssey and seeing what I can do on chain. Maybe might get another airdrop. We'll see. That's it for this week, my friends. That is a wrap. If you're looking for more insights, make sure you check out our revamped Weekly Shift newsletter, providing free weekly market insights every Friday, my friends. Subscribe at collectiveshift.io/newsletter. That's collectiveshift.io/newsletter. We will see you again next week. Bye for now.